you trust AI with your money? Sounds wild, but Robo investing uses AI-powered financial platforms to help better assess investment goals, alert for risks, and automatically rebalance portfolios as markets move. Money expert Robyn Thompson is here now to tell us how this works. Good morning, Robyn.
Good morning. Nice to see you, Matt.
This is fantastic. This is very interesting, I think, too. Fantastic, I think, for some, but, you know, there's a lot of different questions about it. So first of all, take us through what it actually is, what it's actually about.
Yeah, so robo-advising is as it sounds. So it's an AI-based investing. So you have a platform, and on that platform, you have algorithms that actually go in and trade on your behalf. So what takes place is you set up an account online, the algorithm or robot will ask you a series of questions. Based on that series of questions, it's going to create a portfolio for you. So it's going to look at your goals, it's going to look at your risk tolerance, it's going to look at the different parts of your life that you tell it about, and then it creates a portfolio based on your needs.
And I'm assuming the more specific, the better with those questions for the AI.
Yeah, so I think the specificity is really important because it is AI, it is not human, it's not going to understand the context of your life. So if you are looking to buy a house, as an example, the likelihood of the robot or the AI algorithm is going to put together a more conservative portfolio because you likely need investment within the next couple years to be able to put money in a time frame. So the longer time horizon will be more aggressive in your portfolio if you have the risk. So in that case, you're probably looking at a higher equity tilt with less stocks, more stocks, less bonds. If you're looking for more conservative, it's going to have more bonds and less stocks. So it's really about understanding what are your goals, what are you looking to achieve, and then once you tell it that, it will then rebalance and automatically invest you into a diversified set of exchange-traded funds to make sure you have diversification across the board.
Yeah, which is, again, it's fascinating too when we talk about the uses of AI. Let's take us through how it actually works. Right, and give us some examples. I think we have some graphics here to kind of show the viewers how this would actually work for them.
Yeah, so the first thing you're going to do is you're actually going to open up an account, or you're going to look online, you're going to fill out the information, it's going to assess your goals, it's going to take a look at your timeline and your risk, and then it's going to build out that diversified portfolio. So either usually a conservative or a balanced or a growth, and then it automatically rebalances. So what happens here is that once your money goes into the account and you've set up that profile, it'll automatically allocate to those ETFs. Some ETFs actually have an option where you can essentially round up. So when you put money on a debit card, you can round up your next purchase and that money can go in towards your investment account. It'll be automatically invested.
Which is a great feature.
Which is a great feature.
It's a great feature, I think, for people.
Any sort of dividends that get paid out of those ETFs comes into the account, automatically gets reinvested and rebalanced into the portfolio. So it's really about understanding money goes in, automatically invested inside the data inputs you've given it into the portfolios you're using. And it also rebalances if it gets off kilter. So let's say, as an example, you are an aggressive investor and you have a high equity allocation and the markets have just gone crazy and now your equity's too high, it'll rebalance you back down to the parameters you've given it.
Without you doing anything.
Without you doing anything.
Which is interesting. So as for anything, especially with AI, pros and cons, I think, you know, take us through some of the pros, especially I think, you know, the biggest one reading about this is for new investors or people that are trying to get into this for the first time.
Well, when you're taking a look at investing with robo-advisors, the first thing it does is it takes the emotion out of investing. And that's really where people tend to they get into a lot of trouble. So it's like people notoriously, investors tend to buy and sell at the worst times. So it takes away that trigger need to buy and sell based on what's happening in the market. It also gives you access to a broad-based section of ETFs and asset allocation. So you're looking at different sectors that normally you wouldn't go in and buy one stock in one technology sector. If you're buying an ETF, you're getting multiple companies within one ETF, so it gives you that diversification. And if you're a new investor, it allows you to dip your toe into the water, allows to say, how does this work? How do I get into the market? You know, you can invest with as little as $1 and you can just start to invest and see how it goes. But again, it is going to be based on the inputs you give it, and that's what's going to drive the results.
Now, the con side, too, I know there are some cybersecurity concerns, right? All this information that you're giving to AI. And I was reading about the black box problem, too, which is not a lot of background, not a lot of information about how the AI models are making their decisions. So take us through some more of the cons.
Yeah, so I think what you have to understand is, you know, where's your data going? Who owns it? Where's it stored? And what it's being used for? So that, obviously, you want to make sure you're reading the fine print whenever you're putting money to work somewhere or you're dealing anything with finances online. Canadians have become more used to putting their money online. So they do insurance online. They do their
check my banking every day. I do my banking every day.
So investing is just another one of those steps. But you need to make sure that you understand what the security and protocols are around your money, so you make sure you have some protection. You know, and one of the other cons is that, you know, again, because it's robotic trading, it is it's going to prevent you from making those initial snap responses. But if you still want to go in and tinker around with it, you can. So it's also about making sure that you understand the level of diversification and the level of output and input that it's going to take.
Yeah, it's fascinating. It's super interesting. Robyn, thanks so much for being here this morning.
Great to be here.
Well, time for